Hello and welcome to the Full FX Unfiltered. My name is Colin Lambert. I'm publisher of the Full FX, and I'm delighted to be joined by Chris Povey, who's head of FX options at CME Group. Chris, nice to see you again.
Thank you for having me.
All right. We sat on the panel actually at the Full FX London, and I came away from that actually. And I made the observation in one of my columns that I sense that potentially FX options, in terms of its market structure evolution, could pull ahead of FX swaps, which is where I wouldn't say we've all been focused on, but I certainly have been. How is the electronification and automation evolution going in FX options?
It's a good question, and to your point, it's almost been happening on the side, away from the rest of the market and the glare of what everyone sees. Yeah. Now, it depends what you mean by electronification. So to some people, that means electronic price construction. Most banks will do that, across the board now. It can be risk management and skewing based on your inventory, which is a lot harder to do in options than maybe in spot and NDFs. It can also mean electronification and automation of order management systems and EMS, OMS, execution. So it means different things to different people. It's obviously not where the spot market is, but I would say it's up there, if not ahead of swaps and NDFs, just because the type of client and the type of bank trader is evolving towards that electronic future.
Yeah, and I guess there's also there's a systematic element to it, isn't there, that I think helps drive that.
I think that's right. The types of clients that trade options often are quite savvy, and they want to trade in that systematic, automated, electronified way.
Yeah. So are you seeing sort of variations around how different market segments are embracing this change and this automation push? Are banks different to hedge funds, different to asset managers, etc.?
I think yes, the same as any other asset class or any other part of the FX market. I think what's changed probably over the last few years is that a lot of FX options traders at banks now are younger and they've grown up with an electronic spot market. So they're used to, dark pools, liquidity pools, matching, mid-matching, all these kind of phrases that we hear from the spot market. That's second nature now. So whereas options traders of old were sort of maybe a lot more voice and a lot more manual, my peers and the people on the FX options desk now are embracing that electronification in maybe a way that people before them, the generation of traders before them, were still quite happy trading in that voice manner.
Yeah.
So that's what's changed. On the hedge fund side, there's a lot of focus on quantitative strategies, systematic strategies, both from systematic sides and on the macro side. And they embrace electronification, anything to drive down their costs and automate as much as possible.
Is that sort of growth in that systematic, we'll use systematic hedge fund as an example. I mean, is that actually sort of helping to solve for one of the problems I've often seen with the FX options market, particularly when we get into talking about, which I'd like to talk to you about in a second, a CLOB, what the very bespoke, tailored nature of FX options. Is the rise of the systematic fund helping to, maybe not, I guess, uniform the process, but actually make it less?
Yeah, there is, within the FX options market, there's a lot of bespoke nature, a lot of customization available. So you can go beyond vanillas into exotic products and then into structured products, which are even more tailored and bespoke. You mentioned our CLOB there. We're never going to be all things to all people.
No.
But there is an element that can be electronified. What can be electronified is being electronified. And yes, there'll still be room for voice trading and there'll still be a room for that manual bespoke nature. But where it can be electronified, I think people are pushing towards doing that.
Yeah. And I guess then that leads us into the sort of the element of how LPs, for instance, are managing their risk. Mm-hmm. Can they look at it and go, actually, well, I can actually quote these bespoke products and
then offset the risk in the market somewhere else.
This is where I'm showing my ignorance as an old spot trader here, obviously. But that is how they're looking at it.
But it works in exactly the same way as the spot market.
Yeah.
All of those things that you think of about electronification of the spot market equally apply to options. The difference with options is there are obviously so many more variables and risk parameters.
Yeah.
Spot goes up and down, you add NDFs and swaps and you start getting a term structure and different tenors. With options, you have so many different other variables. So, if I do a customer trade with an option, something might be risk reducing in one manner, but it might actually be risk additive in another manner. And so when we're looking at problems like inventory skewing, how do you skew your price relative to what you've got if it's both risk additive and risk reducing. So those problems, it just adds that layer of complexity, but it's the same principle as the spot market.
And I guess then obviously, if we have a CLOB, I assume we're providing we're producing market data that can be consumed. That feeds into that automation process.
Yeah. So we at CME we trade of the order of 5 yards a day of FX options.
Yeah.
On a big day it's 8. Last year biggest day was 14 yards. So decent size, producing a decent amount of market data. Now 95% of that volume is on our central limit order book.
Right.
And it's possibly worth reiterating what that means, because the central limit order book for options is quite a unique concept. The options market is historically an RFQ based market. So having a liquid order book visible 23 hours a day, that's actually something that doesn't exist elsewhere.
Excuse my ignorance, is this in the front month?
Across all months. So we list expiries every day out to 2 weeks in the short dates, and then we list expiries right out to 2 years. So there's a distribution of volume across that. But
so that's quite interesting, because obviously we have the CLOB in spot. There's been a discussion around the CLOB in swaps, and people talk about the complexity of it. But in options, you're actually already delivering that.
It already exists
down the curve.
It already exists. As we said before, it's never going to service some of those really bespoke natures. But where we can centralize liquidity on the strikes that we list and the expiry dates that we list, and centralize it on those certain points, then traders can use that equally alongside what they're doing in the OTC market.
Yeah. Do you see demand from, let me rephrase that question. Regulation is actually sort of pushing the market in certain directions. Do you see demand for, I don't want to use the word CLOB plus, because then we're going to get in a spot plus, but it's like for an evolution of the model to maybe provide different ways of trading? You mentioned dark earlier. Is there more interest in block trades?
So obviously, as you know, there isn't a mandate to clear FX, but it is becoming progressively more expensive not to clear. Now, all of our products, by definition, in what we have in options on futures, are centrally cleared. So our CLOB can be thought of as a point of execution cleared CLOB for FX options, right? Now, when you were talking about does regulatory pressures move it towards a transparent lit order book? Maybe, maybe not. But I think a lot of participants can see the value of having that alongside what they're doing in the OTC. We never say to people it's one or the other. We say, why not trade both? Why not have it as another tool in your toolbox?
And in terms of block trades, is that something that's growing in interest? Because I guess the other thing about the FX options market, from my perspective, is if we're talking RFQ, it can often be quite sizable.
So on average, on our central limit order book, works exactly the same way as you're familiar in the spot market. It's lots of lots of small tickets, and people will work a passive order into the order book and get filled in lots of small clips. Some clients, as you say, want to RFQ and do risk transfer in large size. That's where our blocks come in. So everything we've spoken about so far has been on the order book. Blocks is just another way of executing bilaterally LP to client, and then effectively given up to the CME afterwards for central clearing.
I mean, and I guess to inject a vaguely controversial aspect to this.
I'd expect nothing less.
Thank you. The exchange model is not, and don't get me wrong, CME and you have already said it's not one or the other. But the exchange model is not going to be the answer for a lot of people. There is going to be that need to actually negotiate the block. It strikes me as it must be quite important to your FX options business that you actually do have more than just the CLOB. Is that a fair observation?
I think that's fair. I think we recognise that not everyone wants to trade on a central limit order book, and they want to do that kind of bilateral trading. And we want to make it accessible to all clients. So what you will see is that sort of client initiating risk via a block and doing a large risk transfer trade. But then when they want to manage that position over time, that's when they will turn to the CLOB to manage it and retweak what they've got on. I think that's fair. We recognise that, and we want to make it as accessible as possible for customers to trade our products. I think what you said a minute ago, you said a lot of people. I wouldn't necessarily say it's a lot of people, but definitely some people want to trade in that manner still.
We've never shied away from a sweeping generalisation at the full index.
And we want to make it easier. Now, historically, block trading has been, like OTC trading, very manual, very voice-based, or Bloomberg Chat, or other sort of chat platforms. We're trying to make that more accessible, not just in my world in the options, but in the futures as well. Yeah. So banks are starting to automate that process and allow block trading via API in the same way that they do in the OTC market. And we're also working with third parties like Digital Vega to put it on platforms that our customers are already using today.
Yeah, it's great you mentioned Digital Vega there, because obviously one of the announcements late last year was actually your collaboration with Digital Vega. Can you give us an update on what's happening there?
I speak to them regularly. So to backtrack of what this is, it's going to allow customers to negotiate blocks of CME FX options in the same way that they negotiate OTC options today on the same platform. They'll even be able to price them side by side, which is a first, a complete first. The work's ongoing. It's going to be in production imminently. It may even be in production by the time this goes live. And it's a really exciting, step towards that automation of our products.
Yeah, I mean, ultimately, it's, I guess the nirvana for a lot of people is actually being able to have that completely fungible OTC listed market structure, isn't it?
And it goes back to what we were saying earlier. Like it's not all things to all people, but where it does make sense, it can be very valuable. And therefore putting it on the platforms that they're already using and distributing it via things that they're familiar with, I think is very, very important.
Yeah. Do you see, I guess just finally, Chris, something that's always fascinated me is you can directly correlate volumes in spot to volatility and so on. There are obviously outliers there, but do you see patterns emerging where different types of market participants react differently to different market conditions? For instance, is it a question of like, if volatility does jump and there is, there are movements, then you do see more activity from the hedge fund asset manager space?
I mean, it's very similar to the spot world or any other asset class. The biggest days are often when spot breaks out of a range. So it's not just intraday volatility, but it's also, are we making new levels? And we've seen that recently with the dollar strength. As that continues, that definitely does lead to higher volumes, certainly from that hedge fund and systematic users, but also from the banks that, as you sort of said earlier, are using our CLOB as well as other places to hedge their exposure.
Because I mean, ultimately, it strikes me. I was trying to think of a polite way of saying it without flattering you too much. There we go. It strikes me that actually what we are seeing is the electronification and automation of the FX options space is being largely driven out of CME Group, partly because of collaborations with people like Digital Vega. Do you think that will continue, or do you expect to see more challenges from the OTC world?
I certainly think that we are at the forefront of that, and that's
that would be my observation.
And ultimately, that's why I enjoy the job that I do. Right? In fact, we don't think of ourselves necessarily as exchange versus OTC. I think of it as electronic versus voice or versus manual. My goal is not to convert the entire OTC market to exchange traded. My goal is to get to a point where a trader will be ambivalent. They're equally happy trading OTC or exchange traded, just depending on whichever one the customer asks for, and each is equally easy to trade.
Because obviously, I guess the point of my question was, success breeds success, and imitation is flattery and whatever else. As you become more successful, will this actually attract more service providers in? And actually, we think we can grab a piece of the FX options pie.
Possibly. I mean, the FX options market is relatively niche, compared to the spot world and things like that. There's only room for so many. Exactly. There's only room for so many players. But our strategy is very much to collaborate with and partner with other distribution partners to make it as easy as possible for our customers. We had over 12,000 individuals trade an FX option at CME last year. Now that's everyone from retail trader right up to the investment bank. But that ecosystem can still grow. There's still headroom, and there are still people that aren't trading. So that's where we're trying to innovate and trying to make it easier for our customers to access the market.
It's fascinating stuff, because I must admit, as I said when I started, it was a bit of a revelation to me that actually FX, I said, actually, these guys are in front. It's like, so I wish you luck.
Thank you.
And thanks for your time today. Always great to talk to you. And thanks everyone for watching, and we'll be back again very soon.